Well, thanks again for joining us here on a Thursday morning. I'm Marlon Bowling, your tour guide to the ag commodities. I'm joined by Ted Seifried, and he is with Zaner Ag Hedge. He's located in Chicago. So, Ted, if you don't mind, I want to take a look at the weekly export sales numbers that came out here earlier this morning, and I want to get your thoughts on that. Along with, we had a bit of a surprise of a flash overnight sale, too. So let's look at these weekly numbers here. On the corn, we had a total, and I combined the old crop and the new crop sales. We had a total of 340,400 tons. Soybeans, only 112,300 tons. Yikes, that was below the lowest trade guess. The wheat, 359,900 tons. So I'll stop right there. What'd you think of those?
Yeah, when you combine the soybean numbers, it looks better. But old crop numbers were only like 56,000 metric tons. That's really not good. The corn numbers, that's the one that we really want to see a whole lot better this time of year. We need a lot more corn sales in order to have any chance of hitting the USDA's target. And we're just not seeing it, Marlon. So, the expectation has to be that the USDA is going to lower exports on the big WASDE report tomorrow. You wonder how that affects old crop balance sheets and then how that turns into beginning stocks for the new crop balance sheet that we're going to see the first run of on a WASDE report tomorrow. But there's no other way to say it, Marlon. These export sales continue to be really disappointing, specifically for corn. Beans, this is the time of year where we start to fall off. I guess it's good that we don't have negative numbers, big cancellations in beans, but there's not a whole lot to cancel, right? So yes, there's just nothing good about the overall demand outlook for the markets that we have right now, at least not the export demand that we have for the markets right now. And that's just really smacks of demand destruction. And that's been going on for some time now.
Well, let's look at the current prices then on our quotes provided by bar chart. Let's go to corn and just see what the table shows us here. On July, we're now down 7.5 cents at 586.5, ahead of that report coming out tomorrow. And December down 5 at 515 3/4. So a lot of weakness here to go around. Soybeans, they had been weaker, and now they have kind of reversed out here, Ted. July now 4 3/4 higher, and we're at 1408 3/4. Well, that's on the high of the day. And November now down 1/4 cent is all at 1250.5. That's fairly impressive that they have turned around like that, right?
Yeah, absolutely. I mean, beans are 20 plus cents off their lows. That's pretty impressive. Now, November beans did go down to make a new contract low and then reversed back off of that. So that's a good sign. We are now back above that previous low. And I think this is kind of how we should be going into this report tomorrow. The expectations for the report tomorrow are really rather bearish for corn, but not tremendously bearish for soybeans. So I like the look of what we have on the board today. I don't really understand why July corn was so strong yesterday while the beans were weak. We're doing the opposite here today. This makes a little bit more sense to me.
Okay, let's take a look at the wheat. And as we go to Chicago wheat here, we have July now down 7.5 cents at 633 3/4. In Kansas City wheat here for the hard red wheat, we're about the same. July down 7.5 at 847 3/4. Minneapolis spring wheat, we have July down 7 at 842.5. Well, they're nothing if not consistent in their losses here on the wheat. And Ted, the Wheat Quality Tour gets under, or the Wheat Quality Council Wheat Tour gets underway early next week, right?
Yeah, absolutely. I wonder what we're going to hear about that. And to your comment on the prices, it's all fairly uniform today, which is interesting because, really all we've been talking about for the last couple of weeks is that difference between Kansas City wheat and Chicago being stretched to really record spreads. But again, that all makes sense because Kansas City wheat, that's where the major problem lies as far as the production issues are concerned. The other crops look pretty good. So, the fact that there's not a whole lot of movement in those spreads today is interesting, but I do think it is sort of reflective of we're all kind of waiting to see what these quality tours bring up.
Okay, we'll come back in a moment and look at our livestock action here on a Thursday. We're talking with Ted Seifried. We'll be right back. Well, we talked about the grain weekly export sales. We had them on the meats too. Let's take a look at the beef and the pork numbers over this past week, see what we had. On the beef export sales last week, we had a total of 16,600 tons, and we had the pork coming in at exactly 30,000 tons. Now, both of those numbers were off of their pace from the previous week. Just wanted to point that out. Now, with that in mind, let's see how the trade is looking right now. We'll start with live cattle. On our quotes from bar chart here on live cattle, we are showing just a little bit of pressure. June down 32 cents at 162.67. August is down 12 right now. Let's look at feeders. Now, this is interesting here. You have the August contract now up over $1. We're $1.02 higher at 226.17, and September up 97 cents. So they're kind of getting with the program, gaining back a lot of what they lost yesterday after they had gained the day before that. Does that make sense? Big yo-yo here in feeders this week. Lean hog trade, about June, now up $1.10 at 85.27, and July up 90 at 86.87. I was teasing Christina a little bit ago that, hey, look at that, lean hogs have a pulse today. So what's going on here, Ted?
Yeah, don't look now. Hogs are higher on the day. You know, I'll start with hogs. We had that key reversal higher on Tuesday that we failed to follow through on Wednesday, but at least it wasn't a complete washout. And then here today, we're finding some strength. So once again, Marlon, we're going to say, hey, we have a potential bottom in for hogs. But we've said that many times, or only to eat our shorts, apparently. So we'll have to see what happens there. For the cattle, right? We're trading lower on the cattle. Cash cattle traded lower. Yeah, I get it. But hey, weights are lower. We know we have a tighter supply situation. That should hold this market fairly well together. And after that reversal lower that we saw yesterday, you got to say it's really not bad here today. We're not down sharply. There's not a lot of follow through. And with the feeders higher, I'm hoping by the end of the day, the feeders are the leaders and live cattle can get higher on the board.
Good point.
I'm going to say, you look at the feeder cattle, you know, the reversal lower yesterday, look at July corn, reversal higher, now corn down. Feeders higher. That correlation has really been strong here the last couple of days.
Interesting perspective there. All right. Well, thanks for sharing that. Ted, always good to hear from you. And you have a good trading session here through tomorrow after we get that USDA report out. I want to take a look here, Ted, at a few things on the outside markets too. Let's take a look at the Dow Jones Industrial Average for one thing on the big board. And we'll see here the June is really struggling today. It is actually showing a last trade of 33,301. September down 320. Let's look at the U.S. dollar index. And right now, you have the June futures 600 points higher at 101.870. And then, of course, everybody watching crude oil trade. Here you have the West Texas crude down $1.07 on June at 71.49. So lots of turmoil in the markets. This is after the PPI numbers came out today.
Okay. Well,
another batch of numbers.
And we'll get another one tomorrow.
Exactly.
All right. Thank you so much. Appreciate that. Boy, that Ted sure has a beautiful spirit, likable guy.